Hey, welcome my fellow Humbl investors. It's me, E.T. Clark. And remember, I'm not a financial advisor. I'm not your financial advisor. I'm just a guy who likes to talk about stocks, in particular, Humbl. I tell you what, we're definitely on the radar of people after last week. We had a busy week last week. And after the app release and the interview, I think that we're definitely on the radar of a lot more people. But we're going to talk about that. Like I said, it was a busy week, so let's go over what happened during the week. All right, on the 13th of April, we had an investors call. All right, Brian Foote kind of mentioned a couple of things, and I'm not going to go over everything, but what I'm going to do is just some of the things that I took note on from the investors call. There was a lot of information that he went over with the other investors call. So far as, the structure, the plans, quarterly breakdown, expectations, and so forth. I just want to focus on some of the things that really kind of caught my attention and made me take note. The first thing he said is that, there's phases to there's that crawl, walk, run phase that we have to go through. He said we're coming out of the crawling stage into the walking stage. And if that's the case, that means we're walking a little shaky leg, but we're walking. Next thing after that, once we get good at walking, what comes next? We're going to start to run. He also used the phrase, the Amazon, he used it two different ways. He said the Amazon of digital assets. I love that phrase. And then he also said the Amazon of assets. I didn't like that. I think the word digital definitely needs to be there just for the simple fact that an asset can mean anything. Digital is more specific and is what we do. He also mentioned that on the next day that he was going to be on CNBC Power Lunch. And he talked about the app being released on Friday the 16th. He talked about the mobile phase, the rollout for the mobile app was going to be in two stages. Stage one, the point and pay, and stage two, peer-to-peer. Then he also talked about the NFTs, that non-fungible token, and what's going on with it now in the current marketplace. Now, he gave us a quote during the investors call, but it was also quoted again by one of the hosts of Power Lunch. And they said that the NFTs, the sale of NFTs for the second quarter of this year was $2 billion plus. And they had twice as many buyers than sellers. That's key. I'm starting to believe that he's starting to believe that that NFT is going to be a lot more lucrative than we initially thought. But that's what happened on the 13th. Very next day, 14th, CNBC. During that CNBC interview, that particular segment was talking specifically about NFTs. And they had the CEO of Coinbase on prior to Brian Foote. The CEO of Coinbase got off. They started talking. They gave the quote about NFTs, the sales that I just talked about, and then they transitioned over to Brian Foote. One of the things that the host said that really caught my attention is that we're working with athletes first. And he mentioned, our work with Nelson Cruz, but he also mentioned two other high-profile NFL players. He said Aaron Rodgers of the Green Bay Packers and Dak Prescott of the Dallas Cowboys. So that was the first time I'm hearing of any of that. It's nice to have them and have that recognition, but I think that if we are working with athletes first, we're going to have athletes across the board in all of your sports, not only in the United States, but international sports as well. So that's a good thing. And that's why I'm starting to see that, and I think that they're starting to believe that this NFT is going to be one of the major players as well. He also mentioned, he used the phrase Amazon of assets, but he did not say digital assets. So I like that phrase. I think it's a lot more specific. He didn't mention anything about the release of the app. And I understand that segment was focused on NFTs, but I think that they gave him the opportunity, Morgan gave him the opportunity on two different occasions to really kind of go off course a little bit. But he didn't mention anything about that. I think that would have been a great opportunity. He was very guarded about the revenues. Morgan, once again, asked twice about the revenues, really getting no specific answers. And I think he's being guarded about that for a reason. One of the things he talked about was our path, that they chose to go public via the reverse merger, and that it is their intent to move to the NASDAQ. So that's great to hear. That was really the highlights from what I seen from the CNBC interview. Now on the 14th, two things happened on the 14th. Humbl, we secured money for operating. All right. We received a $50 million equity agreement. We had a $50 million equity agreement and a $3 million bridge note, which is a loan. Let's take a look at that press release in just a second. But also what happened on the 14th, the 2020 annual report was released. Now, don't make a big deal of this report because it's the annual report for 2020. Remember, we really didn't start operating until January of this year. Now, prior to that, prior to the reverse merger, Humbl was Humbl LLC, a private owned company, a company that wasn't generating any revenue. They didn't have these three product brands that we currently launching. So they didn't have that. So you really can't put any, that is there, it's on file. The only good thing that I can actually see coming of this report here is next year. When you compare 2021 to 20, because you got to compare the previous year. And we're going to look damn good. That year over year at that point is going to look good. But here's some quick notes that I got from the 2020 annual report. Assets we have $1.8 million at that time. Liabilities was at $244K. The debt to asset ratio was 0.14. That gives us an indication that, okay, we don't have a lot of, we're not in jeopardy with our debt of going out of business, even though we don't have any revenue. But that's good. Gives you an idea that it's safe. Then you also have that asset to liability ratio of 7.38. Revenue generated 0. Net income was a negative 713K. Once again, good information to have. It'll look better when we compare this year against 2020. All right, so let's go back up here to that bridge note and that equity agreement. Let's take a look at that article.
Come on now.
That's right. Go ahead and hit that like and subscribe buttons, followed by that notification button. That'll help out the channel. Thanks. All right, Humbl family, let's get into this here. Let's see, on the 14th of April 2021, Humbl announced today that it has closed on a $3 million bridge note with Bridgeton Capital Partners LLC. In addition, Humbl and Bridgeton Capital has executed an equity financing agreement in which Bridgeton Capital has agreed to purchase up to $50 million of Humbl common stock. The right to cause Bridgeton Capital to purchase these shares is solely at Humbl's election. Now, you can read the rest of this, but I want to just point out some quick notes on this. All right, the very first one when it comes to this here. And that is on this equity finance agreement, if Humbl elects to cause Bridgeton Capital to purchase shares, the shares will be purchased at a 20% discount. So that's key. So whatever the stock price is, knock off 20%, that's what they can purchase. So It sounds like a win-win for both sides here. Humble is securing some needed fund for operations, as well as Bridgeton Capital now has a equity stake where they can actually make money and buy the stock at a discount, at a 20% discount. In exchange for the $3 million in cash, Humble is issued to Brighton Capital a $3.3 million convertible promissory note. The note bears an interest of 10% and is convertible at Brighton's capital election at a fixed price of $3.15 per share. Now, the very next one is going to be key here. The note also contains a redemption right, which begins on the earlier of the effective date of an S1 registration statement and the 12th month anniversary of the note. I want to back this up here a little bit. Look at that S1 registration statement. Bottom line, an S1 registration statement is a SEC Form S1. That's a form that's needed in order to apply for listing on one of the major exchanges. So this tells you right there, everything just kind of leads into the fact that um, we are heading towards the one of the major exchanges. More than likely, it will be the Nasdaq. Now, the very last statement: Humble may pay such redemption in cash or stock at its election. If Humble elects to pay in stock, such payment will be made at an 80% of the market price of the stock. The note will serve as a bridge loan to the $50 million equity finance agreement. So, bottom line, what we're looking at here, Humble has secured money for continued operations, giving them enough time to have that revenue start kicking in. So, overall, I think it's a good play. Now, on the 16th of March, the mobile app was released, and I didn't download mine until this morning, which is Saturday. And there wasn't much there. I mean, you can see that you can apply for a loan, credit cards. Evidently, they have agreements with these other companies so that they can hopefully have you apply for one of their credit cards or get a loan through them. You can definitely see that you can go in and start, go through the process to invest in ETFs. But when it came to the merchant side of the house, wasn't much there. I mean, one of the things that I like is that you can get a map of your current locations and you can see what type of merchants that are around you that will accept Humble Pay. Quite naturally, since we are just starting, there wasn't any. So that was pretty much it. Understand we're in the infancy when it comes to this. It's just going to grow from here. All right. Now, with that being said, let's take a look at the price action for last week, as well as my current position. As you can tell, you'll be able to find out whether or not I added any to my Humbl. All right, we've had a busy week. We had an investors call, CNBC, with the CEO of Humbl on there, Brian Foote. We have an equity agreement, the 2020 annual report, and the launch of the mobile app on Friday. So let's take a look at the price action for last week. All right, last week was pretty much a week of decline. On Friday, actually on the close of Thursday, Humble closed at $2.84. We were under that $3 support, and we stayed there pretty much for especially on Thursday and Friday. But as you can see, on Friday we opened at 280 and we closed at $2.60. The volume on Friday was actually above that 10-day average volume. We were at 10 million. The 10-day average volume was 9.6. And if you look, you can see that the trend for last week was a downward trend. It's not too steep, but still, it was a downward trend. The highest point we had was $3.57. The lowest point was 245.
Looks like we're still trending towards that 250 mark. Now, here is Humbl and Forwardly. As I've always said, they're joined at the hip. When you see one, you're pretty much going to see the price action of the other. And here is an example of that. Humbl is on your left, Forwardly is on your right. Uh, but guess what? The way I look at this, because of my conviction with this company, I believe that this company, this here is nothing more than buying opportunities. So I've been buying both Humbl and also Forwardly. This here is the short volume, and as you can see, um, as of the 16th, we were looking at the volume. The ratio was 0.55. Bottom line on that one there, it just shows that there is a bearish sentiment out there. Even though I am bullish on the company, there is a bearish sentiment out there. We got a lot of shorters out there uh, betting on the stock to go down. Um, but that's fine. That's just in the short term. If we're short-term traders and investors, that would mean something to us. For us, all this does realistically is this creates buying opportunity for us all. Now, from the awareness aspect, we had a busy week last week, but as you guys can see on the lion.com, uh, within the last 72 hours, Humbl still in the top five. Last week, we were at number one. Uh, Within the last 4 weeks, we've always been within the top five. Within the last 72 hours, we were number two. And just take a look. I mean, this is just not all OTC stocks. You know, you have some stocks in there that's in the major industry indexes as well. So just take a look at some of those lists. Bottom line is this here. More and more people are becoming aware of Humbl and what we can do. So that's always a good thing. With all of that in mind, last week I was buying, I was nibbling. As you can see for last week, um, and Humbl and both forwardly, I bought on the 9th, the 12th, 13th, 15th, and 16th, just about almost every day in both of those stocks. I am down 20% in Humbl and 17% in forwardly. All that means to me is it gives me the opportunity to increase my shares. Um, Once this company just turns around and start to trend up, number one, I'm reducing my cost basis, so I'm going to turn profitable that much quicker. And number two, I'm increasing the number of shares. So that's actually just going to help propel that upward movement, that upward price increase when it comes to me making money and everyone else making money on this stock as well. So that's where I'm at right now.
All right, everyone. As you can see, it was a very busy week for us here at Humbl. I believe that with this week of brand awareness, we got on a lot of people's radar. However, they're not going to pull the trigger. They're not going to pull the trigger because the major market movers, that big money that really moves the market, they're going to want to see our quarterly financials. And I say quarterly, not just one. They're going to probably want to take a look at least a couple of them just to get an idea of where the revenue is coming from which one of our sectors is producing the revenue, how much. Then that's with the first quarterly financials. The second one, now we can get an idea of growth rate. All right. True. It's just one quarter to the next quarter on our very two first quarterly reports. However, you can kind of see it there. You can start to judge the growth pattern at that point. Even once we have that out, we also still need to be listed on one of the major exchanges. I think with a combination of those two, that's when you're really going to see the price of Humbl start to soar. As of right now, I think that we're going to probably be within these ranges that we're currently in, this volatility that we're currently in for quite some time. I look at that as a huge positive. All right. I believe that the company's numbers and revenue that's going to start to come in is going to impress a lot of people. And with that, that basically means I want as many shares as I possibly can before, this rocket starts to take off. So I'm looking at these opportunities, buying opportunities. I think we're going to be here for a while. Once we get a couple of quarterly reports up under our belt and once we're listed, I believe at that particular point, if the information is what I think it's going to be, you're going to see takeoff. With that said, guys, I will see you next Sunday, if not sooner. Take care. Bye-bye.